Good morning, guys. Welcome back to another pre-market live here in Trading Futures Live. My name is Franco, and we have a lot of information to review today, so let's jump right in. All right, so let's start with the economic calendar for the day. We will have some Michigan 5-year inflation expectations. This is a measure that the Fed uses certainly to assess their strategy towards how to manage the inflation, right? So their goal is just to get rates. So that's what they say. We don't know in reality what's the truth, but what they say is that they want to get overnight rates or the federal Fed fund rate above whatever the inflation expectation is, right? So they watch this thing closely. Here it says it's very low and impactful for the market, but I do have the belief that they watch this indicator big time. Then we will have, at the same time, 10 a.m. Michigan consumer expectations and consumer sentiment. And then we have these reports coming out in the afternoon. I will, sometime in the future, I will do a report about the CFTC and the commitment of traders. I think it's quite important for the futures trader to handle that information. Good morning. Good morning to all. Welcome. All right, so like every day, I like to start watching the dollar chart. I think is the number one chart that we need to pay attention. If we are trading futures, I think all the futures contracts and stocks and so on are priced in dollars. So I think it's a very important chart to have at all times while we trade, right? So this is the chart of the dollar. Let's put it on the daily and let me get rid of the drawings and put it on the daily. If you guys see, we are in a very, very steep uptrend on the dollar this year. And I've said it numerous times. I need to scrunch the chart a lot just to get to January. So here. So is among all asset classes the one that is outperforming any other asset classes around the world. Gold is down, stocks are down, commodities are down, crude oil is down. So it's very important to understand how the dollar influences our trading on a day-to-day basis, right? All right, so this is the daily chart. We see the uptrend. If you go to a lower time frame, let's go to the 30-minute. We did have this supply here created September the 7th, and we visited the supply during the London Open. Right, we never got to the demand yesterday, nor Wednesday. So I think this area gave the dollar a lot of support to the extent that we didn't get to the demand that I had drawn here. So and the supply was tested during London after London Open. So 3:30 we started to just come down. And we're trying to retest this supply right here. So my strategy today, like I have said, will be I do expect more continuation with the dollar. So if we break this to the upside, I will play this out this way, right? If we come here and we start chopping around, we have some bearish reads here. we can expect the dollar to come back. Quite honest, I don't think it's very likely. Although, yes, we did have a breakout and retest right here. I think the area is used up, and we need to have we need to take in consideration whatever the bond yields are doing, right? If the bond yields are going up, then yes, I will be more aggressive shorting the NQ. If the yields are going up along with the dollar, I mean, okay. All right, so quite straightforward here in the dollar. There's nothing we have to invent here. I don't think is any need to go down to the 5 minutes. So during my day trading session, I do use the 5 minutes, but it's because I want to see a real price action. But on the pre-market, I don't think it's important to watch the 5 minute or formations and so on. If you want to mark a reference area just for you to trade, you can have this one here. Let me get rid of this. Extensions. There we go. So one way it can behave is like this. Another way is just coming down, break this thing, coming back down to this point. But at this point, we will have a very bullish market today. All right, so I'm not expecting that so far. So let's keep reviewing the rest of the assets. All right, so this is the dollar, the 10-year yield. This is incredible for me. This thing is just going up and up. We're testing the highs from June, from mid-June. I think this is causing the stock market to retrace back down and reprice all the assets, right? Remember, the 10-year yield is the risk-free rate, quote-unquote risk-free rate, right? So we need to pay attention to this. And I want to be very honest. It's quite a scary, like behind this, there's not much. It's not much until like around here, like 440. That's a lot. So we'll see how this goes. My expectations is that yes, the bond yields are going to continue to go up. I hope they don't, because that will mean more pain in the market. But if they continue to go up, that's the way it is. Like, we need to keep trading, right? But I do think after these pivots, we don't have anything. Like I would expect this thing to go to the 4.3%, and it's gonna take some time. It's not gonna be overnight though. All right, so for now, if we see the dollar, if we see the dollar on the daily, we're going up along with the bond yields. That means that we have we're going to have some setups on the short side of the market. Now, I want to be clear. The dollar going up does not mean that the market will go down automatically, right? And for me to try to time the areas where the dollar is aligned with my trading system, I need the dollar to be in any sort of demand. So the way it works is, right, if the dollar is just going up non-stop, I have no short, because eventually the dollar is going to find supply, and that will mean a retracement on the equity market, right? So I rather the dollar go into demand when I want to short. That's the way I view these markets, right? All right, let's continue. The VIX is gapping up. Again, we are in this supply again. Not this supply. I mean, this is the resistance point that I have drawn for days, right? We tested here on Tuesday with the sell-off, Wednesday, Thursday, and then we're finally back here. We'll see how this works. I think this thing might just give up and continue to the 29 levels. I've said that the more time it spends here, the less likely is that it's gonna work, and I do expect the VIX to continue to go up. So there are three factors now that I am accounting for the short trade today. I do have the dollar going up, I do have the bond yield going up, and I do have the VIX pointing in upper direction, right? So those are the three factors that I'm, looking at today to see. All right. I don't do this every day, but I like to do it when it's important. And this is the euro dollar chart. The dollar index is composed 53% by this currency pair. And I want to understand that if this thing moves in certain direction, because this is a spot market, so this is cash, right? The index is a derivative of whatever these things are doing, along with the dollar yen, the pound yen, and other currencies, right? So if this thing moves in one direction, the dollar index will follow, right? So and as a consequence, the equity markets will move accordingly, right? So I want to understand that here we do have, even though it's not the best quality demand because it was already violated, but this is a level, very important level, a 0.995. I want to understand that we are in some sort of demand. Like I said, the dollar is going up, but eventually it's going to encounter supply. I don't want to get caught in that, right? So I want to be aware that the euro dollar might be in demand, right? If I go to the 30-minute lower time frame, I do have, this is, all right, this is London Open. This is London Open. Let me get rid of this one. This is London Open, and this is US Open. Where is it? Right here. So both of them are involved in this formation, right? So I just want to know this. If this thing comes back down, that means that the dollar is in supply, right? So I want to be aware, if this thing comes into this demand and start working towards the long side of this chart, the euro dollar, I don't want to short the dollar, meaning I don't want to long the dollar, meaning I don't want to short the markets. I want to be aware of that. Okay? If you guys have any questions, just put it on the chat. All right, let's go real quick to let's see crude oil. We did have a tough day for crude oil yesterday, minus 4%. It was coming out of my demand. Well, the demand that we marked here, 82.18. We came up to 90.16, and we're retracing back down. Now the daily trend is down. Okay, so we don't have an uptrend on the daily. So any trade on the long side of crude oil will be counter trend, at least for the daily chart. If you go to the weekly, you may have some uptrend, but it's still very complicated. So we had a pivot, a double top, and then we might be changing on the long term, right? Fundamentally, I don't trade crude oil. I used to trade crude oil years ago, but fundamentally, I do think crude oil can drop because you start to see OPEC reduction and so on, and reduction like inventories piling up and reduction on demand. So you might have a actually a repricing on crude oil, right? So any long that we take here is counter trend trade. And commodities are just going down big time, like gold futures, copper is going down, lumber is going down big time, 7% today. Like, no, this was yesterday, 7% yesterday. So all the retracement that we had from September 7th, we just gave up in 2 days. All right, so let's continue. Let's go to the ES, the real meat right here. So we did have this demand yesterday, like I said on the pre-market, and I think I said it on the live stream. It was already tested, and most likely it's not gonna work. So we violated, and we are in this demand right now from 38.80 to 38.50. Now this demand does not mean that I'm gonna take it. I just want to be aware that they're right there and they can work at any time. I don't want to get caught just shorting this thing down here. Okay, I just want to be aware that they can work at any time. So if we do have some sort of retracement, I think I'm gonna put a resistance point right here. 38.87. 38.87 is a good point where to short this thing. You have the breakout right here. You did have some retests, so 1, 2. We tried to recover here after the close yesterday. We went up a little bit until like 9 or 10, and then we're dropping big time. Okay, so if we see the 4 hour, let's go to the big picture so we can spot this better. Let me get rid of this. I don't want to get rid of this because this is the demand that I had. We could have a retest of this area, right? Sorry about that. So if we have, what time was this? This is all overnight, and this is 6 in the morning. I don't really have something of high quality right here. Yeah, 6. Well, this one 10, but we retested down here. So I don't have anything that I would trade to the long side, and I would say, all right, this is a very, very nice area to get long, at least on the 4 hour. Everything is overnight, right? This, okay, this one. All right, starting here. Is too far for me to market today, or is 100 points below, 90 points below? Well, anything can happen, right? And also we have a quadruple witching day today. That means that the futures contracts will expire, stock futures, futures contract expires, stock options expire, stock options for futures expires, and what else? And options for indexes like the SPX, NDX, and so on. So all what happens today is that a lot of volume is going to be involved. That doesn't mean in one direction, right? But it usually is a higher volume on day because all the institutions are finishing up their rebalancing for the expirations and hedges and so on. So that doesn't mean that the market is going to move 5% necessarily, but is probably going to be a very volatile day. All right, so that's the ES. Let's go to the NQ. Oh, here with the volume, I was checking the previous quadruple witching days. I think they are here. So March 18, March 18, if you go to March 18 right here, it was a very bullish day and we had a plus 2%, but the volume, it was not as spectacular, right? So probably because of the, I don't know, I need to go to the actual contract, not the continuous, just to see if actually the volume was a lot higher, right? I checked them, but there's nothing I could tell you. Look, that is what is going to happen. Is very unpredictable, or at least what I found. Right, I need to do some more research though. All right, so let's get rid of the volume here, and let's go to the drawings. All right, so these are the areas that we had here. Yesterday we came so close to the supply. Although we did have opportunities either to the long side or on the short side in the afternoon, I did have an area that I will show on the live stream. It was not here. It was on my 500 volume bar. Just tapped it for few points I did not get filled, and I couldn't take the short. So yesterday was a no trade day for me. So we are in this demand. I want to understand that the trend is very, very bearish. And like again, I don't want to get caught just shorting this thing in front of my face and it can just bounce back up, right? So I want to understand where are the areas, the locations that I want to short. So we do have this. Sorry. We do have this pivot that coincides with the overnight right here. So we might get an overnight, and a spike to the overnight levels and then short from there, right? And then a continuation to the downside based on what the dollar is doing at the moment. Right, remember the dollar is going up at this time, but it's gonna face demand at some point along the day. Okay. So this is the demand like below 11,742. I don't have something that is really, really attractive to me, meaning was created with lower volume or overnight. And I'm not very interested in. Right, the RTY, we did have the bullish case. If the RTY went up yesterday, if it was going up and break this area and then retest, we would try the long, but we didn't have the case. We just collapsed from the supply and we are testing this area. Now this area are not tested in the other equity index. The RTY has the bullish case right here. We're just going to the consolidation from mid-June and July, right? So RTY is being more bullish, is behaving more bullish. So this is a demand that was already tested right here and did not work in the other equity market index. So I do not expect this thing. I do think that ultimately the RTY is gonna turn into the more bearish index, just following the other ones. Okay. So that's let's go to the Apple stock. We did have this trend line here. It was broken on the close, but then we got down yesterday and we finally broke the sorry, this was Wednesday, I guess, 13th. On Tuesday. So we came to the demand. We made the attempt to continue to the uptrend, but sellers were finally dominating the market, and we broke the demand. We tapped this one in the afternoon, but we are gonna open here on the pre-market. We might have some sort of spike, close the gap, and continue to the downtrend. So at this point, being sort of used up the demand, I don't think it's gonna work. And the next high quality demand for me is around here, 143. So we have some room, right? I've heard Apple is the most shorted stock right now, surpassing Tesla. And I think big players are betting that Apple might continue to go down, right? And if Apple goes down, well, I'll tell you, the market will go down because Apple represents a big chunk of the equity index weight. All right, so with that, I'm going to conclude this video. I'll see you guys all in 15 minutes. If you like what I do here, please consider to subscribe and share. Okay, see you guys in a bit. Thank you.